Welcome along to the next in our mini series where we are discussing the use of bridging finance. And joining me today is Paul Mahoney, who is the MD of PT Partner Nova Financial and also a very prolific property investor himself. Nice to see you again, Paul. And I thought a good place to start would be one of the best things about bridging is the ability to be able to recycle your cash. And that's one of, I think, the key ways of growing a property portfolio, even when there are kind of challenging market conditions as we find ourselves in today.
Yeah, so bridging finance obviously is quite good for moving quickly on the entry and being able to get a quick exit. And that's the benefits of it, really. Speed. Is what the lenders promise and quite often deliver. It is when you need to move quickly, obviously, sometimes it makes sense to pay a little bit more for that benefit. And that's really what bridging is all about. The name says it in itself. You're bridging a gap of funds that you don't currently have and that traditional lenders wouldn't give to you quick enough is usually the reason for using bridging. The rates tend to be quite a bit higher than your traditional sort of lending. Generally, from what I've seen, they range between sort of 0.5% a month up to 2.5% to 3% a month, depending on where you, as an individual, and the project you're looking to fund fits on their risk scale. So if you're very experienced and the project is very low risk, you might fit on the 0.5% mark, which is pretty good. If you're if you've got no experience and the project's quite risky, you might have to go to the more flexible lenders, and they tend to be a lot more expensive.
Yeah, I think it's definitely become more mainstream, I would say, in probably the last 5 years or so. Previously, it was very much the domain of, very experienced full-time developers and people that were trading property. But in the last 5 years, we've seen better products, we've seen more competitive products, we've seen more banks entering the space. It's definitely become more mainstream, hasn't it? When was the first time that you used bridging finance? Can you remember?
A few years back. But to be honest, I try not to use it wherever I can wherever I can avoid it. I think too many people are probably too quick to resort to that as the best option. It's just my personal opinion. Whereas, if you can find the funds yourself, or if you can delay things slightly and use a more traditional line of finance, that is personally my preference. Mm-hmm. But each to their own, really. Different strategies work for different people. I do stick to what I say there, though, that too many people rush into it and perhaps don't consider how expensive it is and the fact that projects are almost always delayed. So where I've seen a lot of people come unstuck is borrowing on those much higher rates, projects being substantially delayed, and then not being able to afford the finance.
No, completely agree. Part of this series is to highlight the new Lendlord deal analyzing software for flips and refurbishment projects, because you're absolutely right. If they overrun, the bridging costs can really bite into your margins, and you need to be aware of what your margin is and plug in all the costs from day one of the project to make sure that you're reading the deal is stacking correctly.
I do apologize, I'm not really selling bridging.
Well, we're not selling or discounting it or anything really. I think the whole point of Healthy Debate, as we know from our head-to-head series, is to actually tease out the issues through discussion. And your investor profile is actually somebody that likes to buy and hold. So it makes sense to me that you wouldn't really use bridging very much anyway.
Historically, that has been my approach, yeah. And I do tend. You mentioned before about historically bridging has been more for experienced people, and again, my opinion would be that it should probably still be, because as I say, it's the people that have less experience of the risks associated with property in general. And usually bridging is used to add some sort of value to property. You wouldn't usually use a bridge unless you're doing some work. I wouldn't have thought, unless in some rare cases might be used just to secure property quickly and then switch over to traditional finance. Mm-hmm. But quite often, usually what I've seen is there's some level of works being done. And obviously, whenever there's works being done, there is risk associated with that. Big one being time overrunning, the cost of the works being much higher than you thought. You're finding something out about the property you didn't know, or all those sorts of things that can pop up, which when you've got bridging finance attached, the risk is obviously elevated. If you own the property cash or you've got a JV partner that you own it with, you've got a lot more time to sort those things out. So in the right circumstances, it can work very well. In the wrong circumstance, it can work very poorly.
No, I agree. I think it's also interesting that in terms of the lending criteria, bridging finance is very much more based on the asset rather than the profile of the individual investor. And this perhaps gives newbies a false sense of security that they're able to access bridging finance relatively easily. But of course, from the lender's perspective, all they care about is that they've got security on an asset that's got sufficient equity in it from their, profiling. And, to be honest, if the bridge overruns, they ain't going to be too bothered because they often have penalties and increased rates. So I definitely agree with you that newcomer people thinking about using bridging, yes, it's a tool in the investor's toolbox, but you have to be very clear about when is the right time to reach for it.
Yeah, absolutely. I agree there. You're right. Usually one of the biggest challenges that people getting started have is funds. And sometimes that's a good challenge to have, because when you're using your own funds, you're probably a bit more cautious. When someone gives you the money really easily, you're probably slightly less cautious. And exactly right. If you're putting in 30%, you're borrowing 70 on a bridge, the bridging lender doesn't mind if you mess it up, because they'll charge you penalty interest, they'll take the property, and then everything will work out okay for them. So be aware of that. Whereas, if you've got a great project and you're a switched on person, and even if you're a beginner, you can make it work, and maybe bridging is good for you, but it does depend on the individual.
Absolutely. So I think we would say approach with caution, definitely. Paul, you have had a rather challenging experience with the use of bridging finance, which you've kindly agreed to share, really in the interests of helping make, your hindsight other people's foresight. What happened to you?
Yeah, so it was a relatively recent experience that I had with two properties in Cambridge, which a friend of mine was selling as part of a larger portfolio that they bought. I was buying these properties, but it had to happen quick. And the idea was that it had to happen within about 4 weeks. This was about March last year. Or just after March last year. So I think it was actually just after the first lockdown had ended. So whenever that was. Now, obviously, I couldn't use traditional finance because they wouldn't have been quick enough. The properties did need work to them. One of them also had a short lease. So, you're looking at outside the box for these types of properties, and bridging is the first thing that comes to mind when you're thinking outside the box. Approached a couple of lenders, discussed it with them. One lender in particular seemed to work quite well, as they would, the right rate. They let me exit when I wanted to exit, all that sort of thing, and promised the money within a couple of weeks if everything went to plan. We had a survey done. The surveyor actually called me when he was there, which is pretty rare, and told me these properties seem too cheap. And I said, yeah, it's great, isn't it? And then reported the same back to the lender. And that became one of the biggest bees in their bonnet. Why is this property too cheap? Now, my response was, do you have any experience in the property market? We're trying to buy them cheap to make money off them. That's the business we're in. But they couldn't overcome that. Why are they so cheap? I just couldn't understand that. Oh, surely that's a good thing for you and I. You're taking security over an asset. I'm owning the asset. Who cares if it's too cheap? And various other very little things that were completely inconsequential, in my opinion, held this deal up for nearly 3 months, to the point where I was about to lose the properties. So I was very, very close to losing the opportunity due to the bridging lender and their solicitors being very finicky about little things that I couldn't provide. So that nearly scuttled the deal for me, to the point where in the end I just told them to stuff it and bought them cash. Now, going back to what I said before, the fact I've bought them cash means that I've got all the time in the world without it really costing me anything. Now, just so happens, actually, we got them renovated pretty quickly. They're now 99% done and pretty much ready to either rent out or sell. So, the lender held it up for 3 months. Over the following 3 months, we got the works done. But yeah, just something to be aware of is, just because lenders promise to be quick doesn't mean they're actually going to be quick. And to be honest, in my experience with pretty well all lenders, the risk of upsetting some people is the promise doesn't often match the delivery. So far as how flexible they are and how quick they're going to be. And, you get the sales pitch up front and then you get handed off to somebody else who thinks very differently, such as an underwriter.
Well, that is such an important point, Paul, because, it could really, make a dent in your profit margin if you have a lender that behaves like that. You want to turn these properties around very, very quickly. And I think, just to close this out, Paul, and again, this is Bridging 101, you must know your exit strategy of this finance. Now, it can be by refinancing to a standard buy-to-let mortgage, and there are some lenders that do bridge to let and have products like that, which I personally think are great. It's all done in one smooth transaction with one lender. And they're definitely, I think, a less risky way of using bridging, because you know that you've got your exit kind of locked in. Other ways, obviously, to sell the properties, get the sale proceeds and redeem the bridge. So, you must have your exit, and you must have a plan B if there's a problem.
Yeah, completely agree. At the end of the day, it's all about planning, isn't it? If you don't have a plan, you're very likely to fail. And when you're adding in an extra cost, that plan becomes more important.
Fantastic. Well, thank you so much for contributing to our mini series about bridging. Very interesting to hear your personal experience. And these are the kind of curveballs that can crop up. And I think too many newcomers come to this thinking it's all going to be plain sailing and lovely smooth seas, and they're going to do everything in their time frames. But actually, no, in any property project, you can guarantee there's going to be some kind of thing that crops up that's going to delay what you're trying to achieve. So very, very good advice, Paul. So would you think you'll be using bridging again in 2021? Or you don't know because the right project hasn't come along?
Yeah, look, I would still consider it in the right circumstances. I think that's dented my confidence in I suppose it probably shouldn't dent my confidence in bridging lenders as a whole, but it kind of has a little bit, so far as, because if I'd have missed that opportunity, I'd have lost the profit that I've made from those two properties, which has worked out quite well in my favor over that time frame. So yeah, that little bit annoyed about that, but yeah, absolutely, I would still consider it in the right circumstances, and if I didn't have the funds to do it myself.
Awesome. Well, we'll pop the video of your Cambridge flats in the footer, and there is also a discussion on Property Tribes about what you've been doing with them. I know you're going to produce some other videos, just updating the project, and people can jump.
And videos coming.
Oh, good. And people can jump across to the Nova Financial YouTube channel as well, to keep up to date with all the content that you're producing. And we'll put a link to that as well below the video. But for now, Paul, thank you very much for joining us from Australia at, I think it's now 11:30 at night, and talking to us about the joys of bridging finance.
Thanks, Vanessa.
See you soon.